Decentralized Finance 2.0. One of the most influential and successful waves of blockchain-based innovation has been decentralized finance, or DeFi. DeFi refers to a broad spectrum of decentralized applications that disintermediate traditional financial services and unlock whole new economic primitives, and is powered by blockchains with built-in smart contract capabilities and secure Oracle networks like Chainlink. DeFi protocols are continually evolving and iterating upon proven models of financial-based agreements, fueled by their inherent advantages of permissionless composability and open-source development culture. The DeFi ecosystem advances at breakneck speed. Over the last few months, a surge in liquidity-focused decentralized finance projects has ushered in a new generation of DeFi innovation known as DeFi 2.0. So, is DeFi 2.0 thin yet? DeFi 2.0 is a new phrase in the blockchain world that refers to a subset of DeFi protocols built on prior DeFi breakthroughs like yield farming, lending, and other things. Many on-chain systems with native tokens experience liquidity constraints, which is a crucial focus of notable DeFi 2.0 implementations. Before going into the usefulness and new financial paradigms the DeFi 2.0 ecosystem brings, this video explores previous breakthroughs that set the stage for the DeFi evolution, DeFi 2.0 movement, and discusses the liquidity problem that DeFi 2.0 protocols seek to tackle. Now, welcome back to your favorite YouTube channel, NFTs Explained. But before that, do check our description. There we have links of some amazing courses which will definitely help you in your crypto journey. So without any further delay, let's get started. Early DeFi developments. Uniswap, OV, Banker, Maker DAO, Compound, and other early DeFi pioneers have constructed a solid foundation for the burgeoning DeFi economy, adding many critical and composable money Legos to the ecosystem. The early decentralized automated market makers, AMS, Uniswap, and Banker, were the first to allow users to swap tokens without giving up custody. OV and Compound provided decentralized lending and borrowing, allowing for on-chain yield for deposits and permissionless access to operating capital. Maker DAO provided a decentralized stablecoin for ecosystem members to retain and use in transactions, offering a buffer against the volatility of cryptocurrencies. Users gained access to dependable exchanges, frictionless lending / borrowing, and stable pegged currencies through these protocols, which are three key financial primitives commonly available in traditional financial markets. However, in terms of transparency and user control, the infrastructure that underpins these well-known DeFi-based services is vastly different from centralized companies. DeFi innovations are built on the numerous technological implementations that underpin these decentralized services. Limitations of DeFi 1.0. DeFi 2.0 is an improved version of the current DeFi model, aiming to fix existing flaws while leveraging strengths to provide consumers with new and exciting options on the road to financial freedom. The various limitations of DeFi 1.0 are discussed below in this video. The first stumbling block concerns the usability of DeFi platforms. Because the UX and UI complexity makes it difficult for newbies to use decentralized products, the vast majority of active users are seasoned crypto aficionados. People do want digital inclusion, and the ability of DeFi 2.0 projects to mainstream crypto will determine the next DeFi run. Furthermore, scalability does not make things simpler. High fees and extended wait times for approved transactions continue to strain the user experience. As we all know, most DeFi solutions are built on the Ethereum blockchain, and owing to the enormous number of users on the network, there are considerable delays and transaction costs are skyrocketing. As a result, users with less than a few $1,000s make using DeFi devices unprofitable. People, especially in crypto, have short attention spans, and you can tell that people are moving away from dApps to pursue bigger financial prospects. Yields are not as appealing as they once were, particularly for DeFi's blue chips. This has resulted in a recurrent farm and dump scenario, resulting in unhealthy cash flow for practices and many other issues that contribute to inefficient asset use. Furthermore, to trade in decentralized exchanges, DEXs, and AMM without altering the token's price. All cryptos require liquidity. While incentive programs can provide temporary respite, they are far from ideal and pose a more significant underlying risk for small investors. Oracles are frequently used in DeFi, but some projects are still unaware of their relevance and refuse to integrate with a reliable oracle. As a result, many protocols have been attacked, and they have had to pay for their losses. The goal of DeFi 2.0. Unlike the earlier generation of DeFi apps, which were geared toward users, the newcomers have a specific business-to-business, B2B, focus. DeFi 2.0 protocols capitalize on the fact that the first generation of DeFi products successfully bootstrapped the industry by establishing an initial user base and developing the crucial DeFi primitives that future manufacturers can now employ to construct the next wave of DeFi apps. And the purpose of this new generation of DeFi protocols is to safeguard the sector's long-term viability. The sector's reliance on third-party providers and token incentives to secure liquidity, as well as DeFi's essentially non-existent correlation with traditional finance and the global economy, are the fundamental problems now preventing the sector from becoming sustainable. The entire purpose of DeFi 2.0 and beyond is to address these issues. Some of the DeFi 2.0 movement's pioneers are focused on developing methods for long-term liquidity. Olympus DAO, a protocol that intends to build a decentralized reserve currency, is one such pioneer. Olympus DAO also announced Olympus Pro, a tool that allows other DeFi protocols to use the bonding mechanism to gain their liquidity, demonstrating DeFi 2.0's B2B focus. Building protocol-controlled value mechanisms is another way DeFi 2.0 is expected to help decentralized automated organizations, DAOs. The new wave of DeFi products will produce valuable tools that will enable DAO to compete with companies, reinforcing the movement's B2B focus. DeFi 2.0 innovation and second-generation DeFi protocols. If you're still wondering why DeFi 2.0 is so popular, please keep watching to find out. DeFi 2.0 research began when users and projects understood DeFi's limits, which prompted them to find appropriate solutions. Each answer to each problem has resulted in minor upward market movements, which are exactly what the market requires. The DeFi evolution continues. Whether you think of DeFi 2.0 news as a generational change in decentralized finance or just a fancy name, one thing is sure: it's another sign of the DeFi space's continuing progress. More importantly, the types of initiatives that make up the DeFi 2.0 movement show that we've already passed through what is perhaps the most critical stage of that evolution, the bootstrapping phase. With that out of the way, DeFi 2.0 projects now have the tools they need to keep pushing decentralized finance forward. Developers are getting inventive when it comes to designing protocols that maximize profit, capital efficiency, decentralization, and everything else. Some trade-offs have yet to be seen, but they do exist. For the time being, it appears like everyone is merely excited. In a more philosophical sense, DeFi Phase 1 taught us a lot. There have been numerous accomplishments as well as blunders. Lessons learned from a not-so-distant past. This field is maturing in terms of adoptions in technology and the decentralized ethos that people are forgetting as they combine with the old world, regulation, the government, and traditional finance. And do take note that this is not financial advice. So dire before, engaging in any kind of financial activity, and invest at your own risk. That's all we have for you today. If you enjoyed the content of this video, then give it a like and subscribe to the channel and turn on a bell icon so that you get notifies every time we upload a new video. Until then, peace out.